Welcome back. Still continue to be fairly range-bound on the market. The Nifty is about 27 points lower. Let's get the conversation going with Varun Lohchab of HDFC, Head of Institutional Research at HDFC Securities. Varun, good afternoon. Thanks for joining in. Almost good afternoon, I should say. Let me get your take on, a stock like Keynes, these high-flying EMS players, high valuation stocks. We were just in conversation with the management. I don't know if you could hear what we were discussing. But your thoughts on the entire space and the kind of drubbing that Keynes today is witnessing because of the margin miss?
Actually, we don't cover the EMS space, so won't be able to give precise sort of comments on individual stocks. But as a space, clearly it's a growing space where there is a lot of structural tailwinds in terms of growth, which has a multi-year sort of a runway. So I would not get too worried on any company, say, missing out on one quarter or so, as long as the underlying growth story is intact. They have to be looked at on a 3-4 year time frame, what the potential revenues could be and what the eventual margins could be. But yeah, valuations are are also stretched because those growth rates are being built into the companies. But I think the growth runway is good. So it's a space where one can be positively inclined, but one need to be selective and do the homework on individual companies.
Varun, so far, how are the numbers stacking up for Q2 in terms of revenues, the EBITDA, the EPS estimates?
So overall, earnings season so far has been, largely on expected lines. I would say tad better than what we were expecting. If I look at around 78 companies in our coverage universe of 200 companies have already reported. And on FY24 EPS, we have seen marginal upgrade of around 1.5% on our coverage universe. Autos and oil and gas are primarily responsible for those upgrades. Autos, we have seen strong numbers from TVS, Maruti, which has led to upgrades, even Bajaj Auto. And in terms of oil and gas, oil marketing companies, and even the gas companies which have come up with results have been quite strong. Now you have to keep in context that oil and gas had a very bad FY23. So in some sense, it's just normalization back of those profits in FY24. Banking has been largely on expected lines, no upgrades or downgrades out there. IT and chemicals are two sectors where we have seen downgrades. Last quarter was a similar story, and even this quarter, those downgrades have continued in those two sectors. And consumer as well has been slight downgrades, both on discretionary and staples. So that's the story so far. FY24 is expected to be a good year for earnings, given you will see mid and small cap companies reporting good earnings on a depressed base, and similarly oil and gas companies. But FY25 onwards, we are expecting earning growth rate of 11 to 12% for our coverage universe. FY24 would be much higher at around 23% for our coverage universe.
Okay, got that. That is on the earnings. Varun, how are you looking at currently just the entire large cap versus mid and small cap basket? I mean, we did get that sharp correction. I know a lot of it has been reversed, but do you think we're set for much more of a fall in this basket considering the kind of run-up that we had? And do you think that makes you cautious on the mid and small caps?
So we are selective. I would not say we are overly cautious. When I came last time around, also 2 months back, we were expecting some degree of volatility in mid and small caps to come in because they had a very clean run and a very strong run right from April to September. So valuations are looking a tad stretched in certain pockets. We did talk about, actually between mid and small caps, I would say mid caps or the slightly larger mid caps, which are now more like large caps. That's where we are seeing stretched valuations, and we are getting cautious. If I look at mega caps, I think out there valuations are reasonable now after the index not doing much over last 12 to 18 months. And small caps, again, not overly worried, while optically valuations are looking high, but as I said, earning growth last year was very depressed, and this year you will see very strong earning growth in a lot of these small cap names. and therefore, in that context, not overly worried on small caps. One has.
Okay, we'll have to continue this conversation another time. Varun, thank you very much for joining in. We will get into a very short break. We'll come back and chat more about the markets.